Jai Hind friends. If you are new to this channel, please hit the subscribe button so that you can get regular update whenever a new video is uploaded. And in case you like the video, please do hit the like button. It will help the video reach more and more audience and more people can benefit from the video. So let's start with the investor. Investor, you can see, is a software engineer in Bangalore and he started his investment journey in October 2021. His age is 34 years and he is planning for long-term investments for at least 15 to 20 years. And here you can see his monthly investment. So he do a SIP of 16,000 per month into 4 mutual funds, and then he invests 15,000 in gold every month. In NPS, which is National Pension Scheme, he invests 5,000 rupees, and under PF and voluntary PF he invests around 12,000 rupees, and the remaining is in the equity market. And he has given the information about the SIP and the NPS information. And he also says that he plans to remove the following stocks, which is Balaji Mines, as he has Alkyla Mines. TCS he wants to remove because he has Infosys. SDFC he wants to remove because he's betting more on ICICI. And BEPL he wants to remove and says that he tried one small cap in the initial stages, which everyone does. And next he plans to exit from Berger Paint. He says that by mistake he added one stock and left it. And in the portfolio he has AWL and Sirma. These are IPOs, so he's asking should he exit and book profit or keep it for long term. And he has also mentioned that he has stopped investing in mutual fund, which is Axis Flexi Cap Fund. So let's talk about the first 4 investment, which is into mutual fund, gold, NPS and PF and VPF. And then later we'll discuss the equity portfolio. So see, my investment is majorly into equity. I do not personally invest in mutual funds, so I cannot give you much insight about mutual funds, that which one is better or which one is not better. I have no idea, so there is no point in giving my opinion or guiding in any way about the mutual fund. And whether you want to invest in mutual fund or you want to invest in direct equity, it completely depends on your risk appetite. I understand equity, so I'm confident on investing directly in equity. If somebody do not have much time to invest in share market, then they should definitely go with mutual fund also, because there you get a fund manager who will invest on your behalf into the equity market. So there are some positives also to invest in mutual fund. There are some negatives also, but it all comes down to your risk profile, the time that you have. So there is no hard and fast rule that whether investing in mutual fund is good or bad. Now coming to the investment in gold. On this portion we'll discuss a little bit, because in India we still carry that mindset that investing in gold or property is the best investment. But if you look at the numbers will present a completely different picture. If you compare all the asset class, equity is the asset class which has given maximum return to its investors. Let's review the return that gold has provided. So here is the data. This data is from RBI and you can see the 10-year rolling returns of gold versus Nifty. So the red chart is the gold chart and the green chart is for Nifty. So in the period of 10 years, you will see that gold has provided a CAGR return of 5.3% and Nifty has provided a CAGR return of 14.8%. So you can see clearly that equity is the asset class which has given maximum return to its investors. So again, if you were to ask me, I do not invest in gold at all. I only invest in equity. I think gold you should buy only when you're buying it for wearing purpose. If you're buying gold for investing purpose, then to me I don't think that's the right choice, because in share market there are companies which can give you much better return than gold and much stable return than gold. One great example is Titan. So instead of buying gold from Titan, their Tanishq shop, buy Titan shares. That will give you more return than the gold that you'll buy from Tanishq store. And if you look at the CAGR return of Titan, Titan has provided about 25% CAGR return in the last 10 years, and it can easily do the same in the next 10 years also. But as I say always, this is my view. Instead of investing in gold, I would have gone with Titan share. And there can be a lot of people who may agree with this, who may not agree with this, and that is completely fine. And there is one more asset class which almost is similar to gold, which is the real estate. In the real estate also, I think, these are my view, that instead of buying a flat for investment, the better choice would be to invest in equity market. In case you're buying a flat for your own self, that you want to live in that flat, then it is completely fine, because then there are a lot of other things involved in it, which is emotional stability and all. So that is fine. But if you already have a house and you are buying more flat for investment purpose, then I don't think it's a good idea, because the return that you get on your capital deployed is around only 2 to 3%, because that is the amount of rent that you will get from that flat. Instead, I think what you can do is buy the company which gives loans for home. For example, Bajaj Finance, SDFC and other related companies. So these were the views on buying a flat. But my views changes in case you're buying a real estate in the commercial space, because then the returns are much better. So in case you are interested in buying real estate, then I would suggest go for commercial real estate, because that will give you much better return and the price appreciation will also be very good on that commercial real estate. Now coming on to NPS. Now for NPS, there are tax benefit also, and the return that you'll get on NPS will be around 10 to 11%, and it is much beneficial for those who are coming under the 30% tax criteria. But the problem with NPS is the lock-in period. The lock-in period is very big. So this investment is still okay, obviously not the best, because you know my view, the best investment is equity if you understand the stock market. But if you do not understand it, and if you do not have that much of confidence on equity, then it is fine to invest in NPS also. If you were to ask me, again, I have not invested in NPS also. And let me show you one thing. So this is a shareholding pattern, and this shareholding pattern is for Infosys company. And here you will see that NPS also directly invest in equity only. So in a way you are giving money to NPS, and then NPS is then investing directly into equity market. And if I open up this DIIs, you will see that LIC has stake, SBI, ICICI, and NPS Trust also have stake in Infosys. They hold around 1.67 stake in Infosys. And if I'll click on NPS, you will see that NPS has stake in Infosys and Kotak Mahindra Bank. And this stake is visible because it is more than 1%. They may be having stake in other companies also, but these are the companies you can see that NPS has maximum trust on, which is Infosys and Kotak Mahindra Bank. So my mind or my logic says that instead of investing in NPS, why can't I directly invest into Infosys or Kotak Mahindra Bank? Because they are also doing the same. And if I look at the Infosys return, you can see that Infosys has provided 15% CAGR return over the period of 10 years, 5-year 21, 3-year 25. And this is right now down because in the last 1 year it is in negative -14%. In the next few years you will see that this percentage CAGR return of 10 years will also go up. Now let's look at Kotak return. And here you can see that for Kotak, the 10-year CAGR has been 18%, 5-year 10. For 3 years and 1 year it is down because we know the entire banking system is down. SGFC, which is the market leader, who is performing like Kotak and giving good profit growth, the share price has not increased yet, but I'm sure it is going to increase in the next couple of years because eventually the share price follows the earning growth. So again, my view is same. Instead of investing in NPS, I would have gone with Infosys or Kotak or any other safe company. Again, I am repeating, these are my views. Please do not stop your investment in NPS, mutual fund or gold. Everyone has a different risk appetite, different level of comfort with different asset class. I am more comfortable with equity, so I go with equity. If you are more comfortable with other different classes, you should go with those classes. Now coming on to PF and VPF. So for PF, obviously you cannot do anything. It is going to get deducted automatically. But for VPF, you have a choice because it's a voluntary PF. This also is fine. If you want to increase your PF corpus, you can add more to your PF. But again, if you were to ask me, I would have not added VPF in PF because in PF also your return is almost 8%. Now coming on to the last part, which is the equity portfolio. So now let's begin the review. So this is the equity portfolio. Invested amount is 3,48,000. Current value is 3,35,000. Currently there is a loss of 13,000, which is approximate 3.83%, and the number of holding is 20. So one thing before starting, that as per the portfolio size, the holdings are very, very high. According to me, with this size, the maximum holding should be 3 to 6 companies. Because what will happen is that if you will decide 3 to 6 companies, then you will also do more research on those companies. You will also be 100% confident and convinced on those companies, and then only you will invest in those companies. With 15 and 20 companies, what will happen is, and what generally happens is, we hear about those companies from different YouTube channels, from news channel, from friends, from relative, from everyone, and then we end up investing in all those companies. But eventually that does not help our portfolio. It only brings down the return of our portfolio. Alright, now let's review the companies. First company is Alkyl Amine, quantity is 5, invested amount is 14,000. Currently it is down by 11%. This is a good company, it's a leader in the alphatic amine sector. You can continue. Next company is Asian Paint, quantity is 15, invested amount is 47,000. Currently there is a loss of 11%. This also is a good company, a consistent compounder company. You can continue with this also. Next company is Astral, quantity is 4, invested amount is 7,600, and currently there is no profit no loss situation. This also is a leader in the piping segment, a good company. It is still a small company compared to other companies like Asian Paint, Pidilite, so this still has a lot of potential to grow. Next company is AWL, quantity is 80, invested amount is 21,000, and there is a profit of 48%. So now let's look at the profit growth for Adani Wilmar. So you can see that the profit compounding for this company is decent, 5-year 29%, 3-year 31%, and in the 12th trailing month it is down by around 17%. Sales compounding is also decent, return on equity is also looking good. So overall to me, this company from the FMCG sector looks okay to me. The only exceptional thing about this company is that it belongs to Adani Group, and one of the major reason why people are buying Adani Wilmar is because of that. They are expecting that Adani Wilmar may also give returns like Adani Green or Adani Enterprise. Believe it or not, but this is the actual reason why people are buying Adani Wilmar. Otherwise, if you ask me, there are better companies available in the FMCG sector which are growing at a much faster rate than Adani Wilmar. and I'll show you one example of that. And now we are at the details for Varun Beverages. This also is from the FMCG sector, but you can see that the profit growth is tremendous. The sales growth is also fabulous. Return on equity is also very good, and the stock price CAGR return has also been very, very good. And one thing this company has that Adani Wilmar does not have is less risk. In terms of risk, this company is less risky than Adani Wilmar. The business of this company is much better than Adani Wilmar, because if you'll see the operating profit margin of Adani Wilmar, it is just 3 to 4%. And if I compare other things also, like the trust on management and all other things, I have more trust on VBL. So if I want to go in FMCG sector, I would have gone with this company, because this company also has a very good future in India. Next company is Bajaj Finance. Quantity is 5, invested amount is 31,000. Currently there is a loss of 2%. This is a company that you can go with definitely. This is a good company from the NBFC sector, and it is also growing its profit at a very healthy rate. So this can continue to give you good returns. And again, one more thing, that out of these 20 companies, there will be a lot of companies for which I will say you can continue with it. And the reason why I will say that is because those are fundamentally good companies. There is nothing wrong in having those companies in the portfolio. But coming back to the first point which I mentioned on the number of holdings in the portfolio according to the portfolio size, that is one area that you need to work on in case if you want to do any changes. If you want to continue with the same holdings, you should definitely do it, because ultimately it is your portfolio, your money, your return and your loss. Next company is Balaji Amines. Quantity is 11, invested amount is 29,000. Currently there is a loss of 17%. For this company, the investor mentioned that he want to exit because he already have alkyl amines, so that's fine. Let's move to the next one. Next company is BEPL. Quantity is 40, invested amount is 5,900, and currently there is a loss of 30%. For this company, the investor mentioned that he want to exit, and he invested in this at the initial stages. So even I think you should exit whenever you get the opportunity, because there is nothing exciting about this company. Next is Berger Paint. For this also he mentioned that he want to exit, although there is nothing wrong fundamentally about this company, but he already have Asian Paint, so he want to exit that, so it's fine. Next is Divi's Lab. Quantity is 8, invested amount is 27,000, and there is a loss of 18%. This also is a good company, can give good return in the future. This is a company from the pharmaceutical industry, and it is a leader in the API segment. This business can also do very well in the future. Next company is HDFC Bank. Quantity is 11, invested amount is 15,000. Currently there is a profit of 10%. For HDFC Bank also he mentioned that he want to exit from this because he has more conviction on ICICI, which is fine. So let's move to the next one. And next is HDFC Life. Quantity is 15, invested amount is 7,900. Currently there is a loss of 9%. This is a company from the insurance sector, and insurance sector in India is still under penetrated, and this sector has a very, very huge potential in India. In the next 10 to 15 years, I think this sector can do really, really well. So if your horizon is long term, then I think this is a good company. Next company is from the FMCG sector, which is Hindustan Unilever. Quantity is 4, invested amount is 8,800, and currently there is a profit of 11%. This company is the Bahubali in the FMCG sector. It's a company with very low risk. If you have invested in Hindustan Unilever, then you can stay assured that your money will not become zero. This company will keep on giving you decent return, although the return may not be like 15, 20, 25% CAGR, but it will be in the range of 10 to 15. Next company is ICICI Bank. Invested amount is 7,300. Currently there is a profit of 1,000. This is a good bank, you can continue. Next company is Infosys. Quantity is 12, invested amount is 17,000. Currently there is a profit of 1%. This also is a very good company from the IT sector, so you should continue. Next company is Lal Path Lab. Quantity is 10, invested amount is 23,000. Currently there is a loss of 14%. This also is a good company. This also can give very good return in the next 5 to 10 years. You can stay invested in this company also. Next is Pidilite. Quantity is 5, invested amount is 11,000 rupees. Currently there is a profit of 1%. This is a leader in the adhesive and sealant sector, so with this also you can continue. Next company is Relaxo. Quantity is 30, invested amount is 31,000. Currently there is a loss of 25%. This company is a leader in the footwear sector, so with this also I think you should continue. You may have to give this company more time in order for this company to give you good returns. But right now in Relaxo, do not invest more. Just hold whatever you have invested so far and monitor the quarterly result. Next company is Sirma. Quantity is 68, invested amount is 14,900, and currently there is a profit of 21%. So I've checked the company. I do not see anything very exciting in the company. So if I were you, I would have booked the profit and would have invested in some other market leader, which is currently available at a good discount. Next company is TCS. Quantity is 4, invested amount is 12,000, and currently there is a profit of 10%. This is a good company, but investor mentioned that he want to exit because he has more conviction on Infosys, which is good because you should stay with companies where you have more conviction. Next company is Titan. Invested amount is 11,000 rupees. Quantity is 5. Currently there is no profit, no loss situation. This is an excellent company. This I think is the diamond of share market. If you want, you can continue with this company, and if you want, you can add more capital to this company. So this brings us to the end of the portfolio review. One last disclaimer again, that these were all my views. Please do your own research, own study, and then take your final decision. So I hope this video was helpful. Stay invested. Thank you.